All right. Hey, everyone. Thank you for your patience. I know it takes me a little while to get this thing set up. I appreciate you sticking it out. Okay, cool. So thanks for joining me for another Greenbridge Investing Market Analysis. My name is Mark Principato, Mark Pre-Markets. I'm a chartered market technician. And today, of course, we're going to run through this Bitcoin situation that's been going on here. All right, we're going to talk about that. And once I complete that portion of the analysis, then I'm going to go straight to your questions. So if you have an altcoin or a stock chart that you'd like me to see, please ask in the chat now. If it's an altcoin, make sure to put USD or USDT after the symbol so that I get the symbol right. Okay, so with that being said, let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Let's say hello to a few people in the chat here. We got Elizabeth. Hey, good to see you. Schwartz, my international man of mystery. Thanks for stopping by. We got Dan. We got, who else? Eligius, Peter. Okay, cool. We got Dave. We got Mike. All right. Hey, everyone. Kim, thanks. Thank you all for stopping by. All right. So let's get into this Bitcoin situation. Now, first things first. Many of you know, on Sunday, I wrote the article on TradingView about the buy signal, right? That occurred with that inside bar here. I'm going to point that out here so you guys can see what I'm talking about, right? I'm sure many of you are familiar. That's the inside bar. Now, the red candle pretty much canceled that out, but I also talked about this possibility of this. We got another inside bar, okay? And off of the same support level, which is a higher low, and in and of itself is a little mini double bottom situation. It's a higher low relative to the 42,000 point low, right? Or 42,000K level low, whatever you want to call that. So price is trying to find support there. But as you can see, there's no follow through. Now, we had the FOMC meeting yesterday, and the market obviously liked it initially, but today is a different story, right? Now, that's why I don't go by what comes out in the news or what people say, because again, that brings logic into the equation, and markets don't trade on logic. That's a coincidence, right? People like to follow news, and people like to follow along good stories, and oh, that's logical, that makes sense, right? And then the market just happens to go along with it. That's just a generous market, right? So there's no skill to something like that, and there's no statistical reference to something like that either. So you need, in order to play this game, especially on the short term, there needs to be some sort of statistical relevance to your reasoning. If there isn't, then you might as well go to a casino, or you might as well just be an investor like everyone else and get paid a little bit when the market is generous to everyone, right? And basically get paid in hope mode, which is nothing more than, gambling. There's no skill to something like that. All right, so that brings me back to where we are here with Bitcoin. So we had the inside bar develop again, and a buy signal, we can argue, went off. What's the high over here? 48,689. I'll put a little line on that, right? Basically right there. And yesterday, after the FOMC meeting, I guess you can say that became active again. And you can see it's not following through. So these buy signals are aggressive. And they're aggressive because the momentum is really not on your side. That's the problem here, all right? The momentum. The momentum is defined by this structure. This structure, it's not a bearish trend, it's a corrective structure correcting a broader bullish trend. I don't need to show you the broader bullish trend. You all know Bitcoin's been generally strong, right? This is a corrective structure within that trend, and it keeps respecting resistance levels. Okay, that 50K area basically is the structure resistance that this thing keeps respecting. So as long as it keeps doing that, then a lower low is still likely. Now that doesn't guarantee we'll get the lower low. That's why these are aggressive longs, because this location is ideal for longs, right? This is not a place to be shorting, not on the swing trade time frame. If you're thinking day trade and you're after a couple of 100 points, okay, that's fine. But if you're thinking bigger than that, you're taking a lot of risk, because this whole entire location is a high probability area for longs and bullish reversals. Like I said, you have to think in terms of statistical relevance, not hunches and feelings and other kinds of random nonsense that's out there. So that puts your thought process at least on the right side. I'm still thinking long, although this thing is not following through, right? So there are two things you can do about this. Number one, the easiest thing to do, I'm sure many of you know what I'm going to say, is you can wait. All right, what are you waiting for though? You can wait for the structure to change, and that would require a break of this 50K area, right? Price would need to break this area first before doing anything. Then the next pullback from there would be a much higher probability buy signal with the structure going more in your favor. That's worth more than trying to get the best price, because trying to get the best price is very expensive, right? By the time you get the best price, you have to take a ton of losses to finally get that best price, and then hopefully you make the losses back, right? It's not a good game to play, really. So the more conservative thing to do, wait for the resistance break, then look for the pullback. That, again, can take a week to play out. That can take a few days. Now, I see quite some of you here are talking about waiting and you haven't gotten in yet, and there's hype on YouTube. That's great. You know, you've become aware of the herd mentality, and you're starting to separate yourself from it, right? Like you've unplugged yourself at least. That's a good start. So that's one thing you can do. You can wait for the structure to change, or if you must get involved, or if you are open to taking aggressive trades, then the next thing to do really is to wait for a failed low would be ideal, meaning price tests somewhere between this low, what is that, 45.5, basically between 45.5 and 42, somewhere in this region. And if it's followed by a bullish pin bar or an inside bar after it tests that low, that is a very aggressive long. Because again, you're buying into an area where probably a lot of people have shorted it, and now they're going to get squeezed, right? That's the inefficiency you're looking to take advantage of in that situation. Sometimes it's worthwhile to play that aggressive game, but you have to understand what you're doing, and you have to understand your risk has to be very well defined. Otherwise, you can get stuck in something, and then that thing breaks supports. Next thing you know, it's at 35,000, right? So when you're going against the momentum, playing those reversals is not an easy game, but it's something you can wait for, right? If you want to take that aggressive trade. Otherwise, there's nothing to do, okay? I mean, basically that TradingView article that I put out, I basically said long in this area. I didn't give a specific price. Theoretically, it should be stopped out because it went slightly below this low. But if anyone was willing to hold on to it, or maybe they put their stop at 4,000 points, like I usually suggest on something like this, then the trade actually may still be active. Okay, so it's all going to depend on how people entered and how they're managing that risk. But the overall point of Bitcoin is this. This is not an area for shorts. It's an area to be looking for bullish reversals, right? There's just nothing there yet. And we may not get the bullish reversal. If this structure stays intact and we keep pushing lows and we break lows, then 42,000 is the next test. And if we break that, then we're looking back at the 30s, 38, 36, 35. That's what we're looking at. But we cannot predict that. I cannot sit here with any type of certainty and say, well, there's an 85% chance we get to 35,000. Right? There's no way to know that. And anyone that comes out with that nonsense is just making it up, basically, and just looking for attention. By the way, I see one of the comments here. I'm here for the impressions. I got to get more impressions together for you, okay? Because all I have is Seinfeld. Anyway, all right, so that's my Bitcoin analysis. Let me know if you have any questions about that. Someone, by the way, in my previous stream asked a very interesting question and said, hey, if basically Bitcoin determines where all the altcoins go, why do we even look at altcoins, right? And that's a very good point, because it's true. Bitcoin is really like the main guide, like just like the S&P for stocks, you know, that kind of thing. And really, your signals can come from Bitcoin itself. The only reason to look at an altcoin is basically so you can define your risk relative to whatever that price is, right? And relative to whatever structure is there, because you're going to be in that particular coin. But it's really just a mini version of Bitcoin, right? Just think of it that way. Also, sometimes you get these altcoins that are extremely hyped, and you know there's a heavy marketing effort going into it, and that's when sometimes they'll break away and do their own thing. That's simply because they got a large crowd to get excited about it, right? And that's why one coin, or why is this coin, why is Matic doing this, or why is AVAX doing that? It's because of marketing. These coins are not in and of themselves, they don't trade like stocks, right? Stocks can have specific news items or specific things in the industry that can drive a specific stock for specific reasons, right? That's why you have stocks that are correlated, highly correlated to the S&P, and then you have ones that are not, right? And then there's everything in the spectrum in between. So understanding that correlation is important when it comes to managing risk and having realistic expectations, okay? So that's my Bitcoin situation. Let me get to your questions now, because I don't have any news to go over. By the way, that FOMC, just so you know, I do not pay attention to what they say. All I look at is the market outcome, right? So yesterday we had a very strong bullish outcome, and today it's given it all back. So that tells me that no matter what this guy said, it doesn't matter, okay? So, but we'll take a look at some markets here like the dollar and stuff like that if people want to see them. All right, so let's get to your questions. Elizabeth, waiting for a good entry on Ethereum. Clues on that, please. Sure, let's take a look at Ethereum here. Let me go to my Ethereum chart. Let me see, is this the magical chart? No, that's not it. Let me go to the other magical chart. Now I have a chart with like levels on it. Hold on. I like to use that chart. I'll find it here in a moment. I just can't see. Let's see. Is this Ethereum right here? I have this one. Oh, it's probably this one. Is it this one? No. All right. Hold on. I'll get to it. Must be this one. Is it that one? Yeah, it's that one. Okay. So your question is looking for levels. Well, here's the thing. This thing keeps touching the support. Look at that. It touched the support basically a couple of days ago. Gave you the buy signal off of it, but it doesn't really mean a whole lot unless Bitcoin, Bitcoin needs to basically do its job. This was the buy signal. That was it right there, okay, for a swing trade. So that price was what, 38.89 basically, right? So you want to say 39 even if you want to round it or something like that, or somewhere around there. And you can see you're above that now. This thing's at 40.36, but just like Bitcoin, Bitcoin continues to respect those resistances. Ethereum has a situation that's similar. We can argue that this recent Ethereum price action, all of this is a consolidation, okay? And this thing is fluctuating around the range low of the consolidation. That's a great location for longs. Also, if you've bought some inventory in this area, it's not a bad price. If you haven't bought some inventory, it may be a good idea to put on some if you're interested in something like Ethereum, because these are range lows. Now, the range can break and this thing can go lower, but it hasn't broken yet. It's still respecting the range low. So at this point, right, the best thing to do is wait to see what kind of bearish momentum we get from this next pullback leg that's trying to develop on Bitcoin. As you can see, we have this bearish pin bar situation on Ethereum, which is not, that candle's still open, so it can change a lot before it closes. But if you take out the low of that candle, right, if you take out this low right here, it would become a sell signal. So I have no interest in shorting these things, especially things that are generally strong. This broader trend is bullish. That hasn't changed, and we're just consolidating. So if Bitcoin can get its act together and money starts flowing back into this sector, this thing is in a position to break out of the consolidation, obviously, and start working its way higher. But until then, again, we can't predict that. I'm sure there's plenty of morons on YouTube that'll be very happy to tell you that this thing is going to 10,000 by next month because, you know, that's what they do. But there's no way to know that. So right now, I would look for the pullback into the range low area and see if you can get another buy signal somewhere in this area. Bitcoin should do something similar, okay? When that buy signal appears, like let's say it's an inside bar or something like that, the range low, really your stop should be defined by like the range low in this situation, meaning it needs to clear that low. So you're probably going to have a stop of a few hundred points or something like that. But if that thing holds, there's plenty of potential here to justify that risk, in my opinion. So that's it right now. So it's definitely in a good location. It's just there's no setup or confirmation yet. So thanks for asking. Okay, Schwartz. See, he's talking about YouTube. Bitcoin going parabolic. Quick buy now, right? Yeah. See, I mean, it's amazing. It really is amazing that people still actually they get fooled by that still. But that just shows the emotional nature of the herd. That's why they're part of the herd. Okay. I had inside information, right? Inside information. Still, yeah. So I just gave you my my perspective. So Elizabeth, wait it out. Okay. You have my voice on repeat in your neural network. You know, Elizabeth, I hear my voice all the time, and I certainly wouldn't want it on repeat. It's like, no wonder why people don't listen to me. It could certainly be annoying. Maybe you want to add some variety in there. You know, I don't know. Anyway, but I appreciate that. Thank you. Schwartz, yeah. No, I haven't gotten caught in this. I wasn't caught in that pullback. Elijah's, hey, good to see you. Okay, so I'm just going through the chat here. Peter, what do you think of the Fed report? We will have to, okay. So again, like I said, I paid no attention to what they said. Okay, so that brings up the S&P. Let's talk about the S&P real quick because that has to do with the interest rate decision. I'm going to have to look it up and see like actually what they said, but the price tells its own story, right? Keep in mind, the reason why I rely so heavily on price is because I'm basically betting on a simple concept that price is a discounting mechanism, and it reflects all the known information in the world. So all the smart people, all the people with actual inside information, they're all going to act on price. You know, the fund managers, the banks, everyone else that knows what's really going on, they're going to act on that information with money, and it should reflect in price at some point. The price, it should make sense in terms of price. That's what I go by because I don't have any inside information. I know logic is irrelevant, okay, and I know that this is more of a statistical game, especially on small time frames. So that's why I pay no attention to public information like that. I don't use it for any. There's no advantage to hearing it. It's just an illusion of comfort and control. People, oh yeah, I'm informed, and then they can go tell their friends. You know, they have some kind of holiday party. Yeah, I watched the Fed meeting. Oh, really? Yeah, you know, because I'm well versed in economics. Oh, how nice. So, what is it that you really do? Oh, you know, I dabble in a few things. You know what I'm saying? It's nonsense. All right, enough of that. So, let's talk about the S&P. S&P keeps failing at this resistance. Now, but no matter what they said yesterday, right? We had this amazing rally yesterday, and we went back into the resistance, and now we got this ugly candle, right, off of the resistance. That is not good for stocks. So anyone that thinks that investing at these levels, and I've been warning people for quite some time at these levels, these are not investable levels. They're high-risk levels. Oh, but no, they're not. Look at Apple. Apple. I bought Apple at 150 because I thought it was going to. No, I bought Apple at 180 because, you know, someone told me it was going to 200. Now it's at 172. It'll come back though, I hope. Right. So anyway, my point is this. These are high risk levels for investing in stocks. We are at cycle highs. These are not cycle lows. Okay. This low over here is not even a significant low. It's a short-term low, good for swing trades perhaps, but let's look at a weekly chart. this is what you're investing into, right? So I don't know what the Fed said, but either way, I would not touch stocks at these levels. These are ridiculous levels, all right? These are nowhere near attractive lows. I mean, look at this thing. This is all just all the stimulus and all the nonsense, and at some point, that party is going to be over. I don't want to be buying stocks at these levels. You know, if you haven't bought stocks 6 months ago, or a year ago, or a year and a half ago, or 2 years ago, then you missed the party, right? And this thing needs to go back to some significant level in order for me to be interested in investing, right? Which is not the same as swing trades. Swing trades, there's plenty of short-term opportunities. But I wouldn't be going long at these levels, even for swing trades. These are high risk levels. But you know, the S&P makes new highs by like 5 points and everyone throws a party. Hey, look, all-time highs, the S&P, we're gonna go higher forever. No, we're not. Okay, so no matter what the Fed said, pay attention to those levels. Now, let's take a look at the dollar index, because that's really where the story is. This is the dollar index on the weekly chart. Right? It's made highs recently, and look at these weekly candles. Look at this weekly pin bar. Now, we still have a couple more days to go before this closes, but okay, there's some dollar selling going on up here. That's what that looks like. Let's take a look at the daily chart. Why is this important? Because the dollar is a reflection of interest rates, and interest rates shape everything. So we have a double top here on the dollar. As we can see, we have a double top, but here's the thing. The chart isn't bearish yet. We may have some hesitation up here. We may have a double top and all kinds of whatever you want to call it. But we have a range low right there. And this thing may consolidate because this trend is still, or this structure I should say, is still bullish. So until that changes, I have to expect rates to be rising sometime soon. Okay? Even if he said, oh, we're not going to do it for another 5 years, whatever he said. I don't care what he said because they change, right? It doesn't matter with the guy, especially him. But, you know, a year ago he was saying, inflation's transitory. And then a month ago he says, oh, I'm not sure if it's transitory anymore. It might be real. Okay, thanks, Captain Obvious. All right, so that's the situation with the dollar. This is not really that bearish. It's just a pullback. We haven't even taken out range supports. All right, so I'm bringing all this stuff up because he asked about the FOMC, and that's all I'm interested in as far as the outcome of the FOMC. It's also a good idea to check bonds, right? The bond market. Now, the bond market has actually been giving us a warning that it doesn't want to break this support here, okay? That's been interesting because like the dollar's been making highs and the bonds have turned, and the bonds have not broken that low, which means, you know, it's okay, how can the dollar go higher if interest rates have stopped going higher, right? And that's what the bonds are telling us right here. But we have to see, again, because this is a consolidation in the bonds, this can easily turn around and go back to those lows. So we will have to see. Now, if the bonds take out this range high up here, then that changes the story a little bit, right? That means that lower rates or non-rising rates are on the horizon in that case, or I mean, technically lower rates, and that should be bearish for the dollar if it can break that. All right, does that make sense? So no matter what the Fed says, it needs to be reflected in these markets. All right, and that's the real story is in these markets because that's where the dollars are, not in that guy's speech. All right, anyway, so I hope that answers your question. Thank you for asking. All right, so let's take a look at, Dave says here, for the rants and for the impressions. Yeah, I got to work on my impressions. So OMG USD. Let's take a look here at OMG. Now, like I said before, typically you're looking at just miniature Bitcoin versions of Bitcoin. This thing doesn't even look as good, right? Look at this price action. Look at the failed high. This is why I warn people so much about when something's breaking out and everyone's excited and everyone's saying, oh, this thing's going to double, it's going to 10x, it's going to 50x, and blah, 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 blah. That type of information usually comes out here, okay? And then this is what follows. This happens all the time. So that's why, just like I pointed out with the S&P, it's high risk. This is high risk. Of course, it's obvious after the fact, but I say these things before it pulls back like this. it's high risk. You're facing this type of risk. So that brings us to where we are now. We are much lower. But is this lower risk? Well, let's take a look at a weekly chart. I mean, what a pullback, right? You have some pin bars developing on the weekly near much more attractive levels in terms of supports. But the thing is this coin, for one, is a hype coin, all right, for one. It's a garbage hype coin. I know there's supposed to be some big guys, some big institutions involved and this and that, but this structure, if anything, is basically bearish, right? You have lower highs. You still have another lower high developing here, right? No resistance levels have been taken out yet. And you have the steep bearish momentum, right? The steep bearish movement. So in that type of situation, it probably pays to wait for the structure to change. There's really no reason to be aggressive with this. It's not like it's Bitcoin, right? At least Bitcoin, some news can come out and whatever, or Bitcoin is a lot more interest in Bitcoin. You're looking at, these are your levels you're looking at here, right? If you notice, that lower line that I just put in coincides with this old resistance right there, right? Old resistance, new support. So that's the level, that zone between those two levels, this zone is what you should keep an eye on, right? Similar to Bitcoin. I've drawn a similar zone on Bitcoin. That zone, and you want to wait for the structure to change, right? Either we start taking out these resistances over the next few days, which would then prompt you to look for longs after that, not buying the breakouts, but waiting for the next pullbacks to follow, because these things pull back, especially when they're out of play, like they are now. Or you wait for this thing to gyrate inside this zone and at least give you a double bottom or something like that before taking any type of position. Now, again, I'm assuming you're talking about swing trades, you know, because again, when it comes to positions, when it comes to inventory, I'm really not a big fan of these third or fourth tier coins or whatever you want to, however you want to classify them, you know, unless they're pushing extreme low prices, you know, like where they're hated, then that's worth, you know, probably some inventory when they're hated, because you have to think about what's going on when they're hated. When they're hated, it means everyone's banging them out. Right? Everyone is getting banged out, they're getting margined out, and everyone is losing, you know, they're emptying out their coins. That's really the time when you want to step in with some inventory, and we're definitely not there. Okay, these are not hated levels yet. So just something to keep in mind. Now, there's no guarantee you'll ever get a hated level, but it's just you have to be open to the possibility. All right, if this thing can hold, if the whole space can hold, because this thing is pretty much a follower, like the whole space. If you watch the whole space, right, and you can do that very easily by taking a look at total, right? Just look at this. This is a reflection of the whole space, right? The total market cap. And if you notice, this thing is holding these same resistances, just like Bitcoin. When a resistance is cleared, that's probably a good time to say, okay, now I should expect the structure to begin to change, okay? And we don't have that yet. It doesn't mean you take action. It just means you're expecting the structure to change. Does that make sense? And then from there, you're looking for supportive structures or specific buy signals that you can measure your risk from. All right, so I hope that answers your question. Peter, okay. And maybe the Fed has no real clue where the economy is going. Well, Peter, you see, the Federal Reserve, I don't understand how they make their decisions or like what goes into that or what kind of information they use. Now, I know there's certain economic news items that come out that the Fed uses to make their determination in this and that, but I suspect that the Federal Reserve is politically motivated. They're not supposed to be, but I suspect that they are. I mean, what do you expect from this government, right? So if that's the case, and I get that impression from Powell, then you know they're gonna always say things that are just not in line with reality, because it's not politically convenient for them, right? Which again, who does that really hurt? It hurts the investing public, right? But what does he care? What does Powell care? He's worth $50 million. What does he care, right? All these people, they're all these people. So they're not doing anything for our benefit, right? So if they're saying stuff, it could be to save his job or who knows, to please certain political people or whatever, right? I don't know. I don't pretend to know, but I don't take anything that they say seriously. I look at price because price is a reflection of reality, not what these people say. Okay, so that's my political rant. Hey, Mike, do you agree that Chainlink seems to have a pretty solid support? Is there a key resistance break for a bullish pattern? Okay, let's take a look. Oh, from Wisconsin. All right, I like Green Bay. You know, I'm a fan of Green Bay, I have to say. All right, let's take a look, Mike. Chainlink, Link USD. So now this situation is the same as all the others. You asked here, is a key resistance break? No, there's no key resistance break here, right? You have a resistance here, and you have a resistance here. I mean, just like Bitcoin. I mean, it looks very similar, and Ethereum. So you still have those resistances that are intact, and this entire structure, just like Bitcoin and Ethereum, it's a bearish structure, and it's still in play, right? It's a corrective structure. So in this situation, just like the other situations, I mean, it's the same deal. You're looking for bullish activity to develop, and you have to decide in this zone, you have to decide if you're willing to take the aggressive trade, which aggressive meaning you're going against the structure, and if the structure stays intact, then this thing is likely to break those supports, right? That's what the structure implies, unless it proves otherwise, right? And it has not proven that yet. Early signs that this thing is going to change is a higher low, which, you know, we can argue there's a higher low right here, right? Just like with Bitcoin and Ethereum, we can argue that there's a higher low. So that's a start, but it hasn't taken out any resistances yet. So that's what you have to be concerned with. Sometimes maybe you want to take a small position or you want to be a little more aggressive, that's fine, but just be prepared to get stopped out. Be prepared for this thing to break those lows, and if it does, the mistake you want to avoid is not getting too big or trying to average into that, saying, oh yeah, it'll bounce, right? And then there may be an unexpected move that, you know, will put this thing back at like some ridiculous low that, you know, would be hard to believe, like $13, right? This low back here. It's hard to believe that it would test something like that, but it can happen, and you don't want to be exposed on the wrong side of that. That's really the key thing here. So that's why I say it really pays to just be patient and wait for the structure to change without doing anything, right? Or another consideration, if you're more advanced, is you take a small bite, and if the structure changes, then you add to it once you get that confirmation. Otherwise, you're in your small bite, and if it doesn't go anywhere or if it breaks the supports, it's not going to be too painful, okay? So that's something to consider. So thanks for asking about Link. Okay, Kim entered, okay, 160. What do you know with that pin bar? Okay, let's take a look. Solana. Let's take a look at that. So 160, all right, let's see, where is 160? Let's put 160 on the chart. 160 is about there. Okay, so that's obviously it's green for you, that's good. You got into a support area, right? You have an old support area right there, old resistance, I should say, old resistance, which is now acting as a new support. So this is a good start. It's an initial move, but here's the thing. This is an initial move, but it hasn't really proven anything yet. It hasn't proven that it's out of this structure. Now, one thing I can say is it's certainly acting relatively strong to the other coins, right? The other coins don't look as good as this. They don't have those nice initial pushes. But the thing with this is you have this resistance area right there, okay? It's a minor resistance, and if it holds, right? If it's respected, which it might be because this bearish structure is still in play, then you're likely to see the pullback, right? Or the higher low develop, or a possible double bottom off of this situation. So you have a good price and you can afford to give it that chance, you know, let it pull back or let it test the low, because you're just giving back some green, right? So you're basically a strong hand, as opposed to someone who buys it now and they're getting in at the worst price and taking the most risk. Does that make sense? So what you're looking for over the next few days, just like with Bitcoin, is you're looking for a higher low to develop in that region or possible double bottom. Now, what you don't want to see is price close below this low of 149. If price, and when I say close below, I mean it's got to be like dramatically below. It's got to really be below. All right, if it closes below, then that means the bearish structure is still in play. Most likely Bitcoin is breaking supports in that scenario, and this thing is likely to go lower, right? Find its next support. So that's where you should consider, how you're going to manage your risk or prepare for that type of scenario. That's what you don't want to see. And that will cancel out any type of buying potential or any long trade idea. That will cancel it out. It's very important to acknowledge that, because that's where people lose a lot of money. Is the market says this trade idea is no good anymore, take your loss, and people say, well, no, I hope it comes back, and that loss becomes a much bigger loss. Okay, it happens to all of us. I've been through it, and that's why you have to be very, very focused on that, recognizing when it's no longer any good. And who knows, maybe after such a break, right? Maybe it breaks, perhaps you bang it out, take the loss, and then next candle, kind of like what Bitcoin is doing now, turns into another buy signal again. Okay, fine. Then you can try buying it back at that point. But the whole idea is what you're trying to avoid is you're trying to avoid one of these situations where it breaks the support. Because how many people bought into that area thinking, oh yeah, support right there. Yeah, it broke the support. Okay, and now, of course, hope mode may have some people still in this position. But what if the market doesn't come back? Right? If there's a massive sell-off, or if there's some negative news in this thing, or for whatever reason, again, the chart's not going to warn you for something like that. What if it breaks big and doesn't come back? Then you get stuck, right? And that's what you're trying to avoid here, being at the mercy of the market. Does that make sense? So far, so good. Nice entry. Now you just have to see how this thing follows through. The next pullback, if this thing is going to do okay for you, the next pullback should not make a lower low. It should make a higher low, right? Followed by a higher high and change in structure. Does that make sense? Okay, so thank you for asking about Solana. And if you're talking about the pin bar right now, this is not really a pin bar. Maybe it looked like a pin bar earlier and it changed, but it has to close, right? Before you could classify that as a pin bar, needs to close, and that tail needs to be long, not halfway through the candle. Although, yeah, the candle tail can be somewhat meaningful, but really it needs to be a long tail to have more meaning. All right. So Winter Fresh from Romania, welcome. More Romanians. Have the whole country here. Okay. Hey, Reese from London. I remember this time. London Reese, not the one from Australia. Hey, Savi from Brooklyn. How you doing? From Brooklyn. All right, Alex. Oh, and by the way, people always share. I love when people share what location they're from. So I'm broadcasting from the greater New York City area. That's why I can relate to the guy in Brooklyn. I'm sort of like in Brooklyn. I'm just in Jersey. It's almost the same thing. But yeah, so I'm in northern New Jersey, and that's where my accent is from. All right, Alex. Understand what you by BTC is an Elliott wave 4. Is that a weekly wave 4 or a monthly? Okay, and where do you count wave 3? All right, so let's go back to Bitcoin. So you want to talk about the Elliott wave count. And I was talking about on the weekly chart. Here's the weekly chart of Bitcoin. And the way I'm counting this, okay, the wave 3 completion was here, right? The first touch of 64K, that was wave 3. Wave 3s typically look like that. They're big, right? They're very dramatic and this and that. And the wave 4 has been in play ever since, okay? Now, wave 4, so when we reached the bottom of that wave 4, around this 30K area here, the question was, how do we know the next leg is wave 5? Well, there's no way to know until way after the fact. Now, at the time I was saying, it would have to clear that 64K to prove that wave 5 is in play. And this leg that we have, okay, that rallied to 69K, that could have arguably been a wave 5. But here's the thing. Wave 5s are impulse waves. Wave 4s are typically corrective waves, and corrective waves often have 3 legs, right? That's what makes a corrective wave. I see 3 legs here. Number 1. Number 2, impulse waves when the fourth wave develops, it can't overlap wave 1. If it overlaps wave 1, then it's not an impulse wave. This push to 42K overlapped this entire area right here, and that would have been, theoretically, this leg up here, that would have been wave 1 of the 5, okay, if this was truly going to be wave 5. The fact that we overlapped it says that this whole thing, since the 64K high, all of this time has been a wave 4. Does that make sense? And wave 4s are consolidations. That's why it's possible to make that higher high. And if you notice, we barely made the higher high. I mean, 64K to 69K, 5,000 points is not a lot for Bitcoin. I mean, we're using 4,000 point stop losses. So that's really an insignificant number for Bitcoin. So anyone that thinks that just because it made a higher high by a few thousand points doesn't really count. It's a fake out. So it faked out and now it's overlapping. That's why I say this is a broad consolidation based on that when it comes to the Elliott wave. And if it's true, then that opens up the possibility that we can test 30K lows again, right? That would be the range low. Or maybe it finds support around the lower 40Ks or maybe the high 30s again. That would basically put it right in the middle of the range, which is possible, right? It may want to find itself a new range there, something like that. But that's where I get the count from. Now again, the count serves as a general roadmap. And I don't sit there and place bets on that because Elliott wave is very subjective and you really have to put it into perspective. I like to keep it as simple as possible, and using the rules of the impulse is basically all I'm really looking for. When we are in corrective waves, I don't really rely on the wave count much anymore. I'm looking for support and resistance levels. It's very important because Elliott wave can give you like an opinion that puts you way off if you're wrong on that thing. So Elliott wave, either the structure is clear and I can see a clear wave count that meets the rules, or it's not clear. If it's not clear, I don't use it, right? It's got to be that simple. So thank you for asking. I hope that answers your question. Hey, Mr. Plow, good to see you. Okay, let's see. Can we see GRT, USDT? Okay, let's take a look. GRT, USDT. Let's see what the story is here with this. So let's take a look at the weekly chart and get a sense of the bigger picture. Okay. By the way, I basically follow a routine. I don't explicitly say the routine, but every time I look at a chart, I'm following a multi-step routine. All right, you can learn something about that in my ebook. I mean, I basically go over the areas that I cover, right, in the ebook, and I'll have more information about that soon, but I just wanted to point that out. Now, this thing here, you have resistance in this area right here, right? And it reacted to that resistance. Now you're fooling around in a support area. This resistance is a lower high relative to the initial rally, whatever this was here, okay? This whole structure right here is a lower high. That's not what you want to see for long-term stability. You certainly don't want to see that because theoretically this thing is poised to make a lower low. And you could say, but how is this a lower high? It's higher than this high. But I'm talking about this high, right? This entire area is lower. And I see a lot of altcoins like that, okay? I see a lot like that, which implies relative weakness. While Bitcoin was making all-time highs, these things should be doing better. Something like a Solana, something like an AVAX, something that's pushed highs, not this. So for that reason, I'm more skeptical on something like this. So from a technical perspective, you are at a support. Let's go to the daily chart. You are at a support and you have a potential double bottom area here. So if you're willing to take the risk, how much is this thing? All right, 63 cents. So it's not like an expensive coin. You have an area of interest, but the thing is, you are against the structure, just like in many other of these situations. So you have to decide if you want to be aggressive enough to take something like this, right? At the moment, you have the level of interest that's with you, but the structure, this short-term structure, is against you, right? That's bearish, lower highs. So there's an attempt at buying here, but you haven't taken out any resistances, just like the other coins we looked at. So you have to decide, are you willing to take the risk here? You have a bearish pin bar developing right now. Not exactly what you want to see to be going long. Okay, so maybe you haven't gone long yet and you were waiting for a long. Well, this isn't it. If you got long on this inside bar, which is a possibility, then you should have your stop somewhere below this low and take your loss if this thing makes the lower low. Now, if you notice, a lot of coins have a low that looks like that extreme low right there. That coincides with the 42K on Bitcoin. So in theory, that thing should not take out that low. If it does, you really don't want to be in this thing, okay? At least not for the short term. And again, I'm not a big fan for inventory on most of these altcoins because most of them are junk. And they're extremely high speculative. So I don't believe in building inventory in these, unless you're an insider. But if you were an insider, you wouldn't be here asking me to show you a chart. So insiders know stuff that's coming out. Maybe you're the developer of the coin, that kind of thing. Sure, you're going to buy inventory. You're going to make the coin. You own the coin. But otherwise, stick to like the first tier coins as far as inventory goes. So that's how I would treat something like this. At this moment, there's no reason to buy this thing. And even taking a long after a new signal develops is aggressive until the bearish structure breaks. So if you want to be more conservative, you can give it that chance. It's the same story as Ethereum. It's the same story as OMG and those other coins that we looked at. Okay, so thank you for asking. Okay, DOT, sure. I know it follows Bitcoin, but percent, okay, might be higher if Bitcoin, okay, we'll take a look, sure. DOT, okay, hold on, let me just see, okay. All right, so DOT, D-O-T, USDT, what's going on here? So, I mean, percentage-wise, yeah, look, it may have a more dramatic move if Bitcoin can get its act together, but it is doing the same thing, right? So it's really a matter of how much risk you want to take, what kind of position do you want to take in this thing, and where you're going to get out if you're wrong. Right now, this thing is trying to develop a buy signal, right, off of this support. It's trying, but you're going against the structure. No resistances have been taken out. So there's no reason, there's no technical reason to buy this thing right now. Again, the aggressive scenario, you wait for a buy signal to develop off of this support. You use this support to define your risk. And then if the thing can get going, once you start reaching reward risks like 1 to 1, 1.5 to 1, 2 to 1, that's where you start taking money off the table, right? You want to start using chart areas for profit targets. You can do that, something like this over here, but really the first priority should be justifying your risk, right? Everyone wants to maximize their profit. That's why no one makes money in this game, because everyone's trying so hard to make money. And you can't think like in those terms. You have to think in terms of risk and justifying risk, right? Which people don't do because they're not really interested in risk. Risk is boring. Risk is for accountants and statistics people. So yeah, that's how I would treat something like this. Even though it may have more potential percentage-wise, it's really just a function of size, right? If you look at it that way. So that's how I would treat that. Use Bitcoin as your primary guide as far as the signal goes, and use this chart to define your risk. Okay, so I hope that helps. All right, Stewart plan, when Lambo, okay? I'm not sure what you mean by that. If you're referring to a Lamborghini, I don't rent them like you know the other fake gurus do. They have these guys, look at my Lamborghini, right? And it's rented. Yeah, that's nice. Anyway, okay, Elijah's Barrick Gold. All right, let's take a look. Barrick Gold. What is that? GOLD is the symbol for Barrick Gold, I believe. Yeah. Let's take a look. So gold has been interesting. So here's the stock. Now, before we get into details on the stock, let's take a look at gold itself. Right? This is gold. This is a CFD of gold. Gold, look at this candle on gold. Now, I've been warning about gold right? Because gold is basically a function of the dollar. I've been warning about this area. This area has been very tricky, right? It's probably throwing a lot of people off because 1 minute it's a long, then it's a short, then it's a long, then it's a short. This is a highly random area. Now, we saw the dollar pulling back earlier as a result of the FOMC. This thing is trying to reverse. Gonna get a lot of people that are gonna get sucked into this thinking, okay, gold's going to 5,000, but gold is probably not going to 5,000. You have a resistance right there, and the dollar is in a bullish trend, like I pointed out earlier. So gold doesn't have much potential, in my opinion, until the dollar changes its structure, right? And that can take weeks or months. So I wouldn't let this throw you off. Now, let's go back to Barrick Gold, the stock, which, you know, the gold stocks are a good way to gain some exposure to gold without actually having to own the metal. And also, what's nice about stocks is some of them pay dividends, I believe, and they also move on other variables, not just on gold by itself. So as far as Barrick Gold goes, I mean, let's take a look at the weekly chart, because again, this is going to be affected by that interest rate situation. Okay, that you have to keep that in mind. Look at this triple bottom support that you have here, right, in this general area. And then you have this nice outside bar situation that's developed, or actually it's not an outside bar yet, but it looks like it wants to be one, right? This is the weekly chart. I mean, that's a pretty decent move on the weekly chart off of the support. Now, the thing is, again, just like with many of those altcoins, you are still fighting a bearish structure, all right? This is not a bearish trend, but it's a corrective structure. It's a potential broader higher low, and you're at a low point of it, right, an attractive level. So as far as swing trade long, I mean, I would be open to it, all right, as long as you know your risk is defined. That's a nice pin bar that developed yesterday. That would be where your risk is defined from now. So that low is 1727. This thing right now is at 1844. And here's the thing. So these things are noisy. You can probably get a better price if you wait, right? If you wait a few days or whatever, instead of chasing this thing. I wouldn't be surprised if you get a little hesitation inside there somewhere. The reason why I say that is, again, the gold chart is in an area of a minor resistance. The dollar is still generally in a bullish trend. So for something like Barrick Gold, you know, you have resistance here. That's really your next resistance after this one is taken out. None of these resistances have been taken out yet. But what you have, what's very compelling about this is it's a range low. It's a broader corrective type of move. Like it's a higher low range, and you got a failed low off of that, right? So if you were in on this, that's great. If you're not in on this, then I say wait. Okay, you could probably get a slightly better price if this thing pulls back 50 cents or something, and you could probably get a better price. Otherwise, if you buy this thing now, anticipating that this thing is going to continue, you know, you're taking a lot of risk, right? Do you really want to take a lot of risk? I don't like taking a lot of risk, but that's just me. So that's how I would treat something like this. But in general, this is certainly an attractive area. You want to keep an eye on those levels, but just keep in mind, it would be wise to think of it as a swing trade because gold doesn't have the potential in it yet, right? When the dollar changes, that's when I think holding on to these things would make more sense, like holding on long term. So let's say you can mix it up. You can buy some inventory, sit on it because perhaps you believe inflation in the future and this and that, whatever, and you want to sit on some, and you can trade part of that, you know, swing trade part of it and take temporary profits, because there's plenty of opportunities in these stocks to take temporary profits. And as you can see, you know, there are many times here where these things rally, right? They bounce, they rally. I mean, something like this. And if you don't take your money, you give it back, right? And that's, again, that has a lot to do with the fact that the dollar is in a bullish trend. So a few things to keep in mind there. When you're dealing with gold stocks, it's the dollar that you got to focus on. All right, does that all make sense? So thank you for asking. Okay, Tarek from Colorado. What are your thoughts on Luna? All right, let's take a look. Luna USDT. I spelled it wrong. Luna USDT. What's going on here with Luna? All right, not a bad looking chart. Okay, so let's take a look at the weekly chart real quick. I mean, you're still at some pretty significant highs, but that's a nice bullish structure in general. Now, similar to Solana, look at where this thing bounced off of. Okay, old resistance, new support. This thing is on its way though. So if you're not in this, this is not a good time to chase it. This was your buy signal back here. See, some of these coins, this is an example of a coin that's outperforming. Maybe there's some specific news on this thing. Maybe there's a chat room somewhere that promotes it heavily and it has a large following. I don't know. But all I know is that Bitcoin is not doing anything spectacular, and this thing is almost back at its highs. That is relative strength, okay? So you would be chasing it now if you bought it because you're going right back into this resistance zone where people are probably going to be very happy to start selling it to you. You don't want to be caught in that, right? So in this situation, I think the more effective thing to do for a swing trade would be wait for the pullback, okay? See if you can get a higher low. That would be nice. Or maybe it gives you the double bottom, okay? You have to pay very close attention to it. Obviously, it's going to require some babysitting, or you want to set up some notifications to see if price gets back there. But these levels that I'm pointing out here with these boxes, those are your higher probability levels for potential swing trades long, not up in this zone. That's low probability. It may go somewhere, but here's what you need to understand. Like I said earlier, this is a statistical game. And people are misled all the time because they think, oh, I made some money in that breakout, that worked. But if you're taking low probability trades and you make some money, it's only an illusion because over time you continue to take those trades and you have no sense of the probability or any type of statistical advantage, then any money you make, you're only going to give back. It's the same as going to a casino and playing a slot machine, okay? And people don't think that because, oh, it's the stock market, or it's Bitcoin, or it's much more intellectual than going and playing a slot machine. No, it's not. It's the same outcome. So it doesn't matter if it's more intellectual or not. Don't be fooled by all that intellectual nonsense and pretense. So again, it's a statistical game. These are your levels that offer some better probability than where it is now. So you have to decide, how you want to play that, but I wouldn't touch it unless it pulled back here. Now, is it possible that this thing can just keep going and work its way to a new high? Sure, that's possible, okay? But it's a low probability. It can still happen. But like I just said, if you keep taking those type of trades and you're fooled by some early rewards, you will give it back, okay? You can get a failed high up in here, and that's where everyone's going to buy the breakout and get stuck in it, right? A lot of times. Happens all the time. So that's what I'd say, something like this. But in general, this is a strong chart. And buying pullbacks, buying into supports, waiting for buy signals around supports is the effective thing to do. Now, what you don't want to see, or what should give you a red flag, I should say, as far as when it's no longer a good time to be involved in something like this, is when a major support is cleared. Right now, that line is the major support. This right here is just pretty much a newly defined support. So I wouldn't call this a major support, right? The second line. It's newly defined, and this thing can easily give you a double bottom or failed low in this area, all right? And plus it coincides with this here. If it breaks this, okay, if it goes here, you will then have a lower high most likely established somewhere in this area, and this thing will be giving you a corrective structure. That's when you want to step away from it, right? We have many coins in that situation right now. This one is not one of them, all right? So I'm pointing that out so you know what to look for or when to change your expectations. Does that make sense? Okay, so I hope that helps. That's Luna, but thanks for bringing it up. Definitely a nice looking chart. Alex, what do you think about the cycle? Bitcoin, then sell Bitcoin, not all, into high cap alts like ETH, then low cap alts, then when par. Well, that's, I don't know of any specific cycle that you're describing there, but the first thing that comes to mind is the way bonds, stocks, and things like gold or silver or oil work. okay? Typically, money flows, it starts out in the bond market, and then it works its way into the stock market. And then usually when the stock market is at near a peak, you will see things like gold and oil and copper and things like that, cotton, oats. You'll see those things start pushing highs, right? Making new all-time highs. That is usually a signal that the market, the entire business cycle is at a peak, right? And usually what that is an effect of, though, is interest rates. And when things like cotton or oats, or when those things are making highs, oil or whatever, that usually means that the dollar is low, okay? And the Fed usually has to come in to avoid inflation. The Fed has to come in and raise rates, right? We haven't gotten to the rate raising yet. So, and that's often priced in advance. So I don't know if there's any such cycle with these coins, but I'm sure one will develop over time. So I really can't answer anything about that in specific. I haven't really observed anything like that. But there may be a cycle there that may correlate to the business cycle somewhat. It also is going to depend on how these things are more integrated. Like many companies out there own Bitcoin as part of their balance sheet, right? And they're getting more and more exposure to Bitcoin. So as more S&P 500 companies start taking positions in Bitcoin, or whether they get more exposure to it, then you probably will see Bitcoin lend itself more to the business cycle more easily. For those of you that don't know, there's this thing called the business cycle. It's an actual thing. You can Google it, and it tells you a lot about the economy and stuff like that. Okay, so Kim, okay, no problem. Alex, understood what you said. It's still a wave 4. The fake out was confusing me. Alex, I'm sure it confused a lot of people. Okay, a lot of people, especially people that are stuck on very small time frames, like a 4-hour time frame, whatever, and they have no idea how to weigh the larger magnitudes, which really gives you a lot of perspective. Because I suspect that we're in a wave 4, that helps me shape my expectations, because I know how wave 4s typically behave, right? So that prevents me from getting overly excited or exaggerated or thinking that we're going to 100,000 anytime soon, just because 100 YouTubers told me that it's going to 100,000. All right. So anyway, thanks for asking that question. Looks like right. So right, it's possible that we could see a head and shoulders, but even then, sometimes those patterns don't. We may see one, but if it doesn't follow through, then it doesn't mean anything, right? And a lot of people, if one appears, you better believe a lot of your clowns on YouTube are going to be calling, oh, bear market in Bitcoin. Bitcoin's going to 15K, blah, 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 blah. And all they're doing that for, you may wonder, like, why do they do that? Are they trying to help you out? No, they need viewers so that you can click on their affiliate links or buy whatever it is that they're selling to you. That's their incentive to be on YouTube, right? So just always keep that in mind. I mean, why am I here doing this? Well, I have Greenbridge, right? And this is sort of like a big advertisement for Greenbridge, although I'm not talking about it every 2 seconds. Basically, right, that's my incentive. All right, so let's see what else we got here. With 54K being tested again, it can't be too bullish under 53K, but we have to see. We have to see. I'm from Romania. Alex, you may have told me that, but I may have forgotten. Alex from Romania also. All my Romanians. I'm telling you, I'm big in Romania. Yeah, I got to go over there. Okay, can you please look at gold? I would like to load more, but price looks too high to me. Load more. Okay, let's take a look at gold. Now, I mentioned gold earlier a couple of times, but again, like I said, gold, you want to talk about a wave 4. Gold is in a wave 4. I'm letting you see the entire picture here, okay, going all the way back to this. That was the peak. That's like August of what? August of 20, right? So like a year and a half ago, practically, that was the peak in gold. Since then, we've been in a range. This consolidation, which is very obvious on this chart, is a wave 4, okay? You say, wave 4, how's that a wave 4? Well, if you look at the weekly chart, you can see here, well, with the letters not getting in the way, the broader trend is bullish and it's consolidating. And if you do a wave count, basically it's a wave 4. All right, wave 4s are usually corrective and consolidation type of, They're consolidating the broader trend, right? So the broader trend in gold is bullish, and that hasn't changed, but we've been consolidating. And this is what I suspect Bitcoin can do, something like this. And so far, that's what Bitcoin is proving. Anyway, to answer your question about gold, I don't like gold right now. I've been staying away from gold because I don't like these minor resistance levels. I don't like this tight range that it's in. If you're going to do anything with gold, I would say wait for the range lows, okay? Because buying now, like you said, you think it's too high. Yeah, it is. You're buying right into this vulnerable area right here where everyone else also buys it and they get stuck in it, right? So this, even for long term, even if you're accumulating the physical metal, I wouldn't buy it at these prices, right? When you're accumulating or going for physical, which means you're not using leverage, why not wait for these prices, right? It's still within reason. It still can get there, especially if the dollar trend continues, right? And the dollar trend at this moment is still bullish. Even though today is a bearish day, that dollar trend has not changed yet. So when it changes, then gold will most likely break out of this consolidation. But until then, I would keep an eye on that dollar. Use the dollar to help you make that determination. Also, what's going to shape the dollar is the Fed. I have not seen the Fed raise interest rates yet. I don't know what this guy said yesterday about his rate schedule, but obviously whatever he said, I suspect that he said something dovish because, the dollar pulled back and the stock market rallied. If he had said something hawkish, then the dollar should have made new highs, right? But I'm not going to go by any of that stuff. So that's what I would tell you as far as gold. Wait for better levels. Don't react to this. This is where all the gold experts come out. You turn on your financial news channel and some guy, this guy's been in gold for 50 years, right? That kind of thing. And he goes to the gold mines and he knows everything about gold. And he says gold is going to 10,000. There's no gold in Fort Knox. So stay away from those conspiracy theory people. Wait for better prices. Don't react to this, okay? And I wouldn't short gold either. So you said you're looking to accumulate gold. I wouldn't short gold because, unless you're day trading or you're looking at a paper product and you're looking for a quick profit, that's a different story. But certainly wouldn't hold on to a short gold. All right, so I hope that answers your question. All right, let me see what else we got here. So that was Peter. Okay, Alex, when you talked about cotton and stuff like that, I remembered that when I see Litecoin get pumped, I tend to think that, okay, it's usually that, that's an interesting observation, Alex. Again, I haven't really noticed that type of cycle, but there may be one there. I'm not actively looking for one, but there may be one there. So those are interesting observations. You also have to be careful with coincidence, though, because people make this mistake with coincidence all the time. Especially you get these people, like these experts on YouTube who they look back at Bitcoin and they look back 5 years and they make comparisons to 5 years ago to where we are today. And you can't make that comparison because 5 years ago, the landscape was not the same. Institutions were not involved in Bitcoin 5 years ago. It was pure retail. So any type of cycle or any type of thing that occurred 5 years ago is irrelevant to today, because today we have large players, institutional players, and institutional players shape markets, not retail traders. Okay, so just something to keep in mind. Right, you always want to be on guard for coincidence. Okay, hey Farhat, good to see you. Thank you. Flush on BTC 42K looks similar to back in March when the so again it may look similar, but I wouldn't, doesn't mean anything. Okay. You're talking about the push to 42K and you're comparing it to how long ago? Looks similar to, what is that? Let me see. Back in May, consolidation around the flush low. So May, you're talking about May? You're talking about back here? Yeah, you must be talking about back here. So here, I'll draw a line there, right? You're talking about this here. It's a sell-off. I remember, I think back then the reason for it was that Elon Musk said he was no longer accepting Bitcoin for his cars or something. right? I think that's what what was the catalyst was behind that back then. You know, this time, I don't know what the catalyst was behind this. I don't think it was Elon Musk coming out saying something like that. I think China was behind this or something. So again, you can't really make that comparison. Just the best thing to do is know your levels, right? And if price manages to get to a level, like it touched some pretty significant levels in that one candle, and that's it. That's our new piece of information, and that we're working with that now. It really doesn't matter why it gets there, okay? There's always some catalyst, some reason, or whatever, and people put too much weight into the reasons. All you need to know is the catalyst pushed the price to a certain area, and that area may be significant, or maybe it's a new area to consider. But significant meaning historically it's an important support. The low 40Ks, as you can see on this chart here, right? These lines on this chart have been on my chart for like a year or whatever. These lines have been on this chart for a long time. There's significant levels that has come from historical price action dating back to this time here. I guess that time around May when it broke, okay? There's some significance to that. That's historical significance because there's support or resistance. The concept behind that is support and resistance levels, there are traders caught around those levels, right? Some are short, some are long. And because of that, they're going to cause pressure. They're going to act on the price the opposite way because they're having to break even. This is a phenomenon, it's a common thing. So that's why support and resistance levels are even a valid concept. So that's what I'm looking at there, and that's all that really matters to me. I don't care why these things get there, because all of that stuff is just, you know, again, it invites logic into the equation, and logic is meaningless. Okay, so thanks for asking, Farhat. Okay, physical I want. Okay, Peter. Yeah, so physical gold, you're talking about physical gold. I think the best thing for physical gold, again, you're playing the inventory game, wait for lower prices, but when you're playing the inventory game, it's just a matter of size. So you skew smaller, right? If you're buying normally, I don't know, 50 ounces, you buy 25 ounces. I mean, I don't know how much you're buying. Maybe you're buying 1 ounce at a time. I don't know. Or 10 ounces at a time. But I think it's better to skew larger when you're at lower levels. Keep an eye on the dollar. Because if the dollar continues higher, which at this moment it still says it wants to, then you're probably going to get better prices on gold. So you might as well wait until the dollar changes, okay? So thanks for mentioning. Alex, no, Litecoin was big back in 2017. I'm talking about Litecoin this year, and it's getting pumped, okay? But I agree, it could be, yeah. So all right, and that's fine, Alex. Again, it's an observation, and there may be some valid reason for that. I just don't know what that reason would be. So to me, like if I'm not sure, I rely on things that I'm you know, more familiar with. But thank you for mentioning it. It's a good observation. Hey Ben from Toronto. Oh, welcome. How do you determine the entry point when we wait for a daily candle to be completed? So all right, so I can answer that real quick. So first of all, the daily chart, the candle needs to be closed. Right, that's the first thing. Must wait for the candle to close. Now, once the candle is closed, right, the entry point would basically be the high of the candle, but that candle needs to be a specific candle. Can't just be any candle. We have inside bars here, okay? These two inside bars were actually entries to go long. The candle closed, and it took out the high of the candle, okay? So that's what I'm basing my entries on. So the candle must close, and then the high must be taken out. The inside bar is one type of candle that I look for when it comes to buy signals or sell signals. All right, does that make sense? So, but again, that alone has to be within the context of all the other rules being met. That's just the actual setup and confirmation part. But, you know, everything else still has to be lined up. I'm not going to just do this at random levels. All right, so I hope that answers your question there. Oh, okay, cool. So I'm going to wrap this up now. Do I have any more questions? Because it's about that time for me. I want to thank you all for spending some time with me here today. I hope I answered all of your questions. Again, let me know if there's any other questions. You know, again, if you'd like to know a little bit more about my style, you know, I have the ebook. There's a link is in the descriptive description portion of this analysis. The ebook covers the techniques that I use. Okay, I only use 6 techniques, and I use them in a particular way. The idea of the ebook is there's no magical strategy in there. It's using them in this specific way helps you gather actionable and relevant information so that you can make more objective decisions, and at the same time managing your risk within the scope of that decision. That's the whole idea. People want something with like some sort of, a 90% win rate. No, that doesn't exist really. If it exists, that's going to be, like an algo strategy, and you're not going to be able to apply it anyway. But certainly no one's going to give away something like that for free, especially when professional market making firms are using these things to make millions of dollars or whatever they're making. They don't give that stuff away for free, right? So don't let anyone fool you into that. What we're looking to do here is to gather actionable information, but information that's gathered from the market itself, not from people, not from opinions, not from feelings. It's from the market itself. And price is a reflection of all the known information in the world, right? Price is a discounting mechanism. It's one of the basic tenets of technical analysis. So that's the objective here, right? And charts can help us to a point. The charts can help us gauge where probability is more in our favor or less, and charts can help us define risk, quantify risk, and then at that point, we have to determine if we want to take such a trade. And also a chart can help us see where the reward potentials are, reasonable reward potentials. But even if you got into a trade and you no longer could see the chart, your reward risk ratio alone should tell you where you should be getting out of that trade, okay? If you want to have a positive outcome over time. So I hope that helps. I'm going to leave you with that. Let me know if you have any other questions. You can check out greenbridgeinvesting.com. We have a signal service and all that kind of stuff on there. It's been, when stuff like the Fed comes out, things can get very erratic, and I'm a big proponent of it's better not to take any trades than to take lots of trades, because most things in this game are stacked against us all of the time. People don't realize that. I tell people before in previous streams, understand where you fit in this game. Retail traders are not meant to make money, okay? I'm a retail trader too. We are all meant to make others rich. That is our purpose. Make sure you understand that, because it will put a lot of information into perspective. The information that you're constantly exposed to, whether it's on YouTube, whether it's on TikTok, whether it's on Twitter, no matter where it is, the retail trader is here to make others rich, okay? Who are vendors, chart providers, system providers, educators, whatever, fund managers. You're here to make them rich, okay? And that's it. So by understanding that, you start to realize that in order for you to trade, you need to have things really stacked in your favor, probability stacked in your favor. And there are certain pieces of information that can at least align you on that side, align your thinking, because typically the retail trader reacts to things, okay? People on their Robinhood account, they react. They see some news and they react. Yesterday was a great example of a reaction. They're reacting to talk, right? The Fed talk or whatever. That is not an effective strategy. But reacting makes others rich, right? People that are taking the other side of those reactive trades. You don't want to be a reactive trader. You want to be able to anticipate. You want to be able to think ahead and anticipate where things can develop. And if they develop, you are prepared. You can also quantify your risk at that point, right? That process is what you see me do here pretty much on these streams. The only thing that I'm not doing here are actually taking the trades. Okay, occasionally we see some trade setups and I point them out and I mention what you can do and what you cannot do. But this is the analytical portion. And by the way, putting on trades and analyzing are two separate things. They're not the same thing. And most people will just, oh yeah, you're a trader. Yeah, you have to also be, charts, right? They kind of put it all together as the same thing, but it's not. Okay? And analyzing a chart and managing risk are two separate things. Make sure you understand that. Okay, so enough of my rant, enough of my lectures. I'm sure you've had enough of my voice. Poor Elizabeth, she's got me on repeat in her neural network. I don't know why you'd want to do that. But anyway, okay, everyone. So I want to thank you all for spending some time with me here today. Yeah, so I'll be streaming again on Monday. All right, so make sure you to check it out. Do I use, Alex, to answer your question real quick? Yeah, I take a look at them. I refer to those as market proportions, but yeah, I certainly do. But I'm looking for specific proportions. I'm not, if you pull up your standard measuring tool, it's got like all kinds of numbers on it. I'm only interested in two numbers. So I like to use that as a to back up even further levels that I'm anticipating, right? So I'll combine that with historical support or resistance levels for extra confidence around a level. Okay, so anyway, I hope that answers your question. I'll have more about that kind of stuff soon. Anyway, all right, everyone. So I want to thank you all for spending some time with me here today. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you very much for watching.